Ladies and gentlemen, good day and welcome to Bikaji Foods International Limited Q4 and FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star, then 0 on your touchtone phone. Please note that this call is being recorded. I now hand the conference over to Ms. Hazel Rathod from Essential Technologies. Thank you and over to you, ma'am.
Thank you. Good afternoon, everyone, and thank you for joining us for Bikaji Foods International Q4 FY24 earnings conference call. From the management, we have with us Mr. Rishabh Jain, CFO, and Mr. Manoj Verma, CEO. I now request Mr. Rishabh Jain to take us through the key opening remarks, after which we can open the floor for the question and answer session. Thank you and over to you, sir.
Thank you very much, Hazel, and thank you all the investors and friends. So we welcome you to the year-end numbers review. And largely, so this year has gone by, has been very good for the company. So overall, we did a multiple work which is resulting in this number. So largely, in this year we set up a complete capex plan. So we got a commitment from government to invest close to 400 crore rupees of investment, and they got subsidy of 261 crore rupees. So this year we completed all the capex commitment, and eventually we have booked close to 93 crore rupees of PLI income in this quarter, which is for 3 years, 22, 23, and 24. This year also has been all the investment beat at all plant level. So we completed all plant, be it Patna plant has come in this year, frozen plant, Raipur plant. So largely we have been a future ready for growth in next 2-3 years. Be it also a talent investment. So largely this year has been a lot of investment, be it talent, be it at the back end or front end. So be it back end, we have done a good investment in our team building, and as well as front end. So all core and focus state, we have brought in a good new leaders to run the company and set a distribution and right RTM. Also with the view of automation. So largely this year was from automation perspective also we've done a lot of investment. Be it setting up right DMS, SFA, tracking every sales team. We have built a good sales team this year. So largely be it at every front, we have done a good investment this year, which will give a good result in coming 2-3 years. From numbers perspective, so largely this quarter has gone by. So overall our revenue growth was close to 12.8%. When we see this quarter, of course, in these numbers, PLI income has been added in other operating income, which looks inflating. But overall, our revenue growth is close to 12.8%. Our gross margin is close to 33.1%. When we see last quarter of December, our gross margin was 31.5%. So our gross margin increased this quarter to 33.1%. And our EBITDA margin overall is at 13.1%. So overall, at key metrics, so this quarter has been improved for us. So largely from PAT perspective, so this quarter we done 116 crore of PAT, which is close to 200%. Of course, this includes PLI income. So overall, at a year's number, so overall, our overall revenue growth is close to 13.7% versus volume growth is upward of 15.5%. So volume, if we see ethnic snacks, volume growth is close to 17% plus. So ethnic snacks has grown at a good level above company average. At EBITDA level, so largely post PLI income or EBITDA is close to 91 crore rupees, which excludes PLI income also. Then also our EBITDA is close to 300 crore rupees, which is a significant jump from last year. Our ROE and ROC is close to 20 to 31%. So largely we have built a complete capex. So largely years to come, there will be minimal capex in plant at least, and this will again help in improving the ROE and ROC for us. From manufacturing facilities perspective, so largely we have done close to 3 lakh tons or metric tons of capacity, which can comfortably give a turnover of close to double our turnover with this capacity. So we built a good capacity for coming years to come, and across all core and focus market, be it in Assam and Bihar, which we set up capacity in last 2 years, versus in focus market also in Concall, in Raipur, in UP, as well as in South. In all focus and core market, we set a good plant to have a further growth in our business. And we'll go beyond Rajasthan, Assam, and Bihar, which are core market. So in next years, we target to include at least 1 or 2 states in a core market. So, Manoj, over to you.
Yeah, so in terms of distribution, so over years, our direct reach has been increasing. And if we look at in the past 1 year, we've added almost about 100,000 outlets in our direct reach. Also this year, we opened CFAs, which we found more relevant and to enhance and further strengthen our distribution network. So we opened depots or CFAs at Ghaziabad and Varanasi in UP, in the west of India, Ahmedabad and Pune, and also one in Raipur. That's where our plant has come up. Talking about our marketing initiatives, so first and foremost is that we have extended contract of Mr. Amitabh Bachchan to continue as our brand ambassador for next 2 years. More so, we also shot a lot of films with him, and about 16 different films targeting at various products and subcategories to leverage them, which we aired on the digital media and also on air over the year. Besides this, we invested heavily on retail marketing initiatives. This was a kind of bus branding, road shows, dealer boards, so on and so forth. For the first time, we invested behind, as much behind consumer offer, which was 10% extra, or even on a product like Bikaneri Bhujia. Not only did we restrict ourselves to domestic media investment, we also invested heavily in our international market, and that's where we did this was the sponsorship of shows, which was for Badshah, then participated in most of the events which happened and these food festivals outside. Now, coming to the business, if we look at, so in quarter 4, our volume growth has been 14.5%. If we look at revenue growth, so revenue growth without, if we say, without PLI is 12.8. However, we add that PLI to it, which is what is reported, and you would see on the slide, is 32.9%. Ethnic snacks in this quarter has grown at 10.5%. Packaged sweets at 13.8%, Western snacks at 14.2%, and Papad in this quarter has grown at 23%. If we look at our full year performance, so overall volume growth is 15.3%, revenue growth 18.5%, ethnic snacks at 13.4%, whereas if we look at ethnic snacks, volume growth is 17%. Packaged sweets, value growth is 14.4%, Western at a full year level 13.2%, and Papad grown at 10% this year. The contribution of the ethnic snacks continue to be the highest, and it's the shift between, if we look at last year quarter 4 and this year quarter 4, is almost the same. So there's hardly a movement there. All these categories have moved up. Now, coming on to how our markets have performed, we look our India market as 3 core, focus and others. So here if we look at our core markets, which contributes to over 72%, has grown at 9.1% in this quarter. Our focus market has grown at 15.3%, and other markets, which is a small part, has grown at 45%. Exports in this quarter was flat. However, we look at a full year number, exports has grown at 22.2%. Core markets grown at 11.2%. Focus markets at 22.6%, and other markets at 14.8% growth. So, mix, if we look at the by segment, so core markets contribute to 74.4%, focus markets at 12.9%, others at 9.8%, and exports in this quarter being 2.9%. However, at a full year level, if we look at, so our core markets is 71.5%, followed by focus markets at 13.8%, other markets at 11.2%, and exports 3.5% contributing to our overall revenue. The mix of packs, if we look at, so family pack, which is above of rupees 10 pack, in this quarter has grown at 11.5%, and the growth of impulse pack has been 13.6%. Whereas if we look at it at full year level, so family pack and impulse pack has almost grown the same, family pack at 13.5% and impulse pack at 13.6%. The contribution of large pack continues to be high and is at 59%, whereas the impulse category is 39.5%.
So overall numbers, overall revenue, so we're going to take close to 18% post PLI. EBITDA of course at 390 crores plus at 83% growth over last year. So and PAT is largely 93% losses. We have PAT is close to 262 crore rupees over last year. So largely when you see a volume gross margin level, so in quarter 3 our gross margin is 31.15%, and this quarter is close 33.1%. Largely we are seeing improvement in gross margin as well as there are multiple type of work in improving gross margin. Be it raw material supported plus we are passing some prices last quarter. So largely from PLI level, so we are close to 93 crore rupees this year. For this close to 2022 was 19.8, 2023 was 28, and this year was 45. So last 2 years has been realized from government. This year, of course, we have moved as accrual income because we have fulfilled all the conditions of government of doing investment of sales support. So this we are hopeful that the government will receive grant from government before December 24. So that's the part from now presentation side. We are happy to answer all the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Avinish Roy from Nuvama. Please go ahead.
Yeah, thanks and congrats on good numbers. So for the full year, you saw 15% kind of volume growth and 18% sales growth. So my question here is, do you expect again early teens kind of volume growth? And now most FMCG companies are talking about 2 to 3% of price hike in some part of the year. So would you expect that also to continue? Because in Q4 your pricing growth was not there. But will you expect that to come back in FY25?
So largely, we have built up capacity across each ethnic snacks and Western snacks largely in the last 2-3 years. And we are currently 40 to 45% type of utilization. So larger next year target is also to grow at a volume at least minimum at 30 to 15% type of volume growth. So this year it looks like chana, potato, these both product prices is a little inflationary this year, it seems like. So of course, we see that this year 2 to 4% price rise we will take, and so that's how overall numbers will build up.
And would you have seen market share gain? Because I don't think the industry volumes are growing at 15%. So which states would you have gained more market share on a full year basis?
So if you look at our focus states has grown at about 22% and the core states at 10%. So what we assume is, while we yet to have this data, but while we assume that we would have gained shares in the focus states broadly.
Sure. One follow-up I had was if I see your full year performance in core and focus and compare that to Q4, focused states there is a drop of around 7% in Q4 versus only 2% drop in core. If you could tell us why in focus there is a bigger drop, was there a base effect, was there a one-off, and how do you see focus states in terms of outperformance in FY25?
So I think the right way to look at it is, that if we look at it a full year number, and which is what is 22. However, we look at that this particular, quarter four is being not as good as because of, Delhi. We have earlier we did not focus or we could not got our eyes into Delhi market, which is what we have done some changes, some stuff which is happening. You will see in next one quarter. So by end of quarter one is what we'll be in a different place on this Delhi market as well. Besides this, if you look at rest, all other markets has done extremely well. Also to tell the audience on the team, while we were talking about 6 focus states, what we have also done is here onwards, Chhattisgarh is where our new plant has got commissioned in the last quarter. And now we will have our focus on this Chhattisgarh state as well. So here on when we'll talk, we'll include Chhattisgarh also as our focus market.
So last quick question, your exports growth was flat in Q4 versus 22% for full year. Again here, is there any one-off? Are you worried on all these surprise checks which are happening, Hong Kong, Singapore, etc.? Because Indian regulator has said that spices there is no problem. But global regulators are saying there is a problem, and it could have a trickle-down impact on other exports also. So what's your comment on this?
No, so we don't see that primarily, on the spices, and that's also there's a factor which, these spices company also trying to work upon. However, our peer group or ourselves are not impacted of it. This is nothing but some quarter shift from this quarter to another quarter. And for export, what we normally have is we have order about 60 days in advance. So this problem is not the reason you will see this coming back in the subsequent quarter. And at a full year level, if we look at that's how we measure and that's how our team carries or our distributor carries target, is really in line with what we planned is ahead of 22%.
And just one follow-up there, you also use a lot of spices, obviously, in your namkeen, bhujia, etc. So there is no risk, right? From a global standard quality aspect, there is no risk.
So we comply with the law of land. So whatever is permitted in that country is what only we export. So this passes through very, very close and tough audit processes, and that's how we export it. Even when our product goes to that country, we get those compliances checked, and that's how we are able to sell in these markets. So we don't see as such any of the challenges with us.
So thanks and all the best. Thank you.
Thank you. The next question is from the line of Percy from IIFL Securities. Please go ahead.
Sir, my first question is on the focus states. There your market shares are very low, right? So, the percentage growths, can be very, very disconnected from the industry growths because of the low base, low single-digit kind of market shares in many cases. So shouldn't you be gunning at some 25-30% kind of volume growth in these states? And what is required to get there? And do you think that is a realistic number to target, first of all?
See, I think very well said that one can look at these numbers as well. But no, in all these states, if you look at, so there is a situation wherein, we have the market leaders and also have, on below us, the regional and the local players as well, right? So that's the status in these states. Now, we don't want, in the earlier the Concalls also we have spoken about that we don't want to be a discounter brand, a disruptive brand wherein we do these kind of volume gains and thereafter it becomes difficult to live with it or to continue with those stuff. So that's the reason our investment is more on to get our distribution right. If you look at the distribution number, if you look at the coverage, what we are getting in these states. So it will be a slow and steady and a slow burn. This is what we always have been talking about. Even today as we speak, we've grown at about 22%. That's a value growth. And if we talk about volume growth, it's about 25% in our focus state. That's the volume growth we have delivered. And in certain states, if we speak about, say, UP, which is a large market, of course, our shares are also very, very small. But there, the growths are to the tune of this category, about 40%. So we are more or less in line with perhaps what you said, 25% growth. But more importantly, this is about getting ourselves right and future ready for the times to come.
Understood. Secondly, just wanted to understand your judgment on what happens to volume in different pricing scenarios. So right now we are seeing a slightly negative pricing, and the volume this quarter is around 14-15%. Supposing if like next year you are saying 2 to 4% YOY pricing growth, in that scenario, does the sort of volume take a hit, or we still continue with our 14-15% kind of volume numbers?
So largely, as a company with being a big capacity, we have made built it. So target is to at least grow at 10 to 15% volume growth at least for next 2 years.
Sorry, how much did you say?
13 to 15%.
13 to 15% volume growth. Okay, understood. Lastly, coming on to your margins, so this quarter, if I strip out the PLI benefit completely, your EBITDA margins are 13%. Now, on an ongoing basis, I think you will be booking PLI benefit of somewhere around 150 basis points of sales. Correct me if I'm wrong. So would we be right in assuming that for FY25 we should be targeting a 14.5% kind of a EBITDA margin?
Of course, post PLI we will target around the same post PLI.
Sorry, I didn't get you. Can you repeat that?
So including PLI, of course. Without PLI, our target is to at least improve a basis point. This year, gross margin improvement, we see a little bit overall that a little bit challenge on the being inflationary pressure. But overall, we have built all the costs, set up all the capacity fixed. So in our books, all the cost has been fixed. So once we improve utilization, the operation efficiency will come in. And overall, we are targeting at least 0.5% EBITDA improvement this year also, plus PLI.
Including PLI, right?
Yes.
Okay, I'll probably take this offline. The line was not very clear. Okay, anyways, thanks a lot and all the best.
Thank you.
Thank you. The next question is from the line of Dinamra H. from JM Financial. Please go ahead.
Hi, am I audible?
Yeah,
you are.
So congrats on the good results. My question was regarding PLI. What is the consistency in the PLI scheme we can expect, for the next 5 years? Are we going to continuously keep bidding for PLI in the next 5 years? And how do we see that?
So largely from PLI perspective, so we have received close to 261 crore rupees of commitment from government, and we invested 438 crore rupees. So it's a 6-year subsidy. So 3 years has been gone by, and we booked close to 93.6 crore in a single year last year. It was for 21-22, 2023, and 23-24. For next 3 years, it will be on quarter-on-quarter basis because we completed all the capex commitments. So it will be on a quarterly basis. We'll book the PLI income for next 3 years.
And how long, approximately, do we see the continuity of the PLI within our business?
For next 3 years.
Next 3 years? Okay, yeah. Got it. Thank you.
Thank you. The next question is from the line of Mehul Desai from JM Financial. Please go ahead.
Hi, sir. Thanks for the opportunity. Just one question. One, obviously, if you could give some context on your plans for the frozen business. What is the status there? How are we looking at from FY25 and 26 perspective? And how are the margins in this frozen portfolio? That's my first question.
Mehul, thank you. So largely, frozen is in a very niche category, niche setup now. So largely, we completed the capex in last December, started trials. So by next 2 months, we'll complete all the trials and everything. So frozen is largely for export business. In overall export, close to 40% comes from frozen. So that's the overall shift will be there when currently we are buying from a third party, which will shift here. But yeah, overall, we see a good improvement in frozen, and this will also help us in building our QSR vertical, QSR business, because we also want to be in this business. Of course, there will be slow and steady days in this. We don't want to go up. So largely, this year there will be 2-3 QSR outlets that we will open, do a lot of trials and everything. And from next year onwards, this frozen will become a back-end plant for all the QSR vertical as well as, of course, to grow a frozen business and export.
Okay, got it. Secondly, I think Percy did ask this question, but on the gross margin side, we have closed full year at 32.5x of PLI, and 4Q was around 33%. And you are saying 2 to 4% price hike. You think with that kind of price hike and current RM environment, you should be able to sustain this gross margin levels?
Yes, we will be able to sustain this. It looks as of now, we don't know post-election what will change, but yeah, looks as of now, like the chana and the potato price is in a very inflationary this year. So chana in last few weeks has gone haywire. So increased close to 10-20% in a month time. So, but yeah, overall so we are largely not dependent on a single raw material. Like we are into 5-6 categories, purchasing lot of pulses, not any single crop, dependent on any single crop. So largely any single increase in raw material doesn't impact much on us. But yeah, overall, we see that this year there will be little inflation pressure, 2 to 4% can work out well for us. And in last year also, like we also when price preparation was there, we not pass on completely, cannot reduce MRP. We started promo offer. We have reduced half, we'll reduce full once we see that price inflation pressure will come. So we have budget in hand currently also.
Understood. And some bookkeeping question. What happened in the staff cost? It was flat on YY basis, and secondly, the other income was quite high. So if you can just explain that.
So largely in other income, basically interest income has been booked. We have FDs of close to 51 crore rupees. So that's the interest income has been booked in other income, and staff cost is largely flat. Last year there was. If you see the overall breakup of when we publish annual report, so ESOP expense was big this year. ESOP expense was less because last year has been booked. So this year overall investment in people was big. So when we see overall, it's a percentage is flat, but investment in people is big this year.
Okay. And last question: what are the capex, or what is the capex plan for FY25-26?
So for next 2-3 years, there will be just, we don't see major capex coming in, just NPD, regular maintenance capex. Plus we need to build some small mother warehouse type of thing, but yeah, it will not be a big capex type of thing. It will be just a small, some internal activity.
Okay, got it. Thank you so much, and best of luck for FY25.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Shirish Pardesi from Centrum Broking Limited. Please go ahead.
Yeah, hi Manoj, Rishabh sir, good afternoon. Thanks for the opportunity and congratulations. So, 2 questions in the beginning. Could you talk something about competition, how the reaction on the new markets when you are entering? Is there any discounting which is going up, or you're primarily seeing a very sharp reaction for the organized players? Any color if you can add?
Hi, Shirish. Competition certainly, is there, and it's going fierce only. And, from the top end players, they're completely aggressive. And so are the small time players, which is local and regional players, because, there was some, the price commodity benefit which these guys got, and they started mushrooming up. So in terms of competition, certainly it is there, and you have to be competitive to hold your space and move on. That's what is good. But good thing is that category has its momentum, And there is also an inorganic growth wherein, it's a shift from unorganized to organized. So that's helping all of us move forward.
So let me ask Manoj the candid question. When you enter into the new market, you take a pricing strategy and discounting as a placement, or you do the advertising route and do the local advertising. So I think I'm just trying to understand how do you plan to, or how do you penetrate these markets? Because obviously existing competition will be there, and you are being a new player. Obviously you will get with the right distributors and partners in the channels. But I'm just more curious that why this growth is happening.
Yeah. So when we get into new markets, so certainly discounting is not a part of our strategy, and that's completely outside for whatever we'll do. We are more into expanding our distribution, reach, quality. That's what we talk about, and also is the investment behind marketing to create some demand and brand awareness. That's what, keeping in mind, we extended contract of Amitabh Bachchan, because, his stuff, we did certain research, marketing teams came back, with the brand equity, what we are getting and what we are leveraging, whether we were there in the store or in those markets before or not, but when our guys go there, so ours is not an alien brand. We are at par or plus minus to the national or the key brand, whatever is selling there. That's what we do. Also, Shirish, these markets are not virgin markets for us. We have been there for ages. It's that we never focused these markets. It was more of a trading model. Whoever had asked will go, and then supplies are not there. We'll not serve for service. Those has been the challenge. We are now getting into whole hog in these markets. It will be a slow burn, but you will see over some time we will be amongst top three players in these markets.
Okay, that's helpful. Rishabh, on slide 24, you did allude saying that chana prices is going up. Just wanted to understand, in the high inflationary situation, have we done any tweaking in terms of sourcing strategy or hedging strategy?
Yeah, so largely sourcing and hedging is a part of our strategy, and largely we always book close to 40 to 60% of our overall requirement of season we normally book. And this year also we did the same. We have booked close to 35-40% of overall requirement. So largely that hedge we have hedged, but of course we cannot completely hedge and completely foresee the price rise. But overall we have secured our next 40-50% of requirement. And balance, of course, we need to purchase, and that's how we'll be passing on few prices in largely products which are chana producers.
Okay. My last question on Chhattisgarh plant. When do you expect to get commercial production?
So we have done a commercial production in March.
Okay. And if I just ask obviously since Manoj has said that there will be some trading and the product will be available, but if you can share in FY24 or maybe FY23, what kind of revenue would have got in Chhattisgarh and what kind of expectation you are saying, because you are putting the infrastructure now? So
largely Chhattisgarh currently is a small number. So largely, so we see at least go this year like 2025 we will do close to 17-18 crore top line this year. Versus, yeah, even more of course.
Okay, wonderful. Thank you, Rishabh. Thank you, Manoj, and all the best.
Thanks.
Thank you. The next question is from the line of Gaurav Jogani from Axis Capital. Please go ahead.
Thank you for the opportunity, sir. So the question is with regards to the target of that 13 to 15% volume growth. If you can help us dissect how are you looking to target these volume growth within the various categories. So for example, what will be your target for volume growth in the ethnics part of the business, and what would be in the western snacks and the packaged sweets part of it?
Yeah, so the growth in western snacks would be slightly, a couple of percentage point higher than the ethnic snacks going forward. Because the way we have, commissioned our factories across, the way this brand is picking up, it will be ahead of the ethnic snacks. However, all these plants do have a capability to produce our ethnic snacks as well. It's only Bikaneri Bhujia and Namkeen which primarily will continue to be produced and supplied from our Bikaner factory.
Sure. Sir, what about the packaged sweets? I think packaged sweets was also one key focus area for you. And, there were talks about democratization of these sweets into smaller packs so that the reach increases. So any update on that front?
Yeah, so sweets, if we talk about, of course, we spoke about two things. That sweets has huge seasonality impact, right? So during the season time, we are the demand is by far higher than the capacity what we have, and in rest of the time we see it's reverse of this stuff. So what we've done is that we've started some 5 rupee patisa packs and all that stuff, and in the last quarter is what we've done trials, and it is getting well accepted. I think it will take a while by when we'll be able to settle the small packs, because market of sweets in small pack is also not very big. This would be about creating an opportunity, creating a market for that, and that's what we are working on.
Sure. And so my second and last question is with regards to the margins again. I mean, if we look at the margins on a full year basis for FY24, ex of the PLI, it is around 2.5%, the gross margin that is. And on an exit basis, we have already done, I think, 33% kind of a gross margins. So, with the inflationary impact that we are seeing right now, how much of an impact can we see on the margins going ahead? And how much can we, negate this with operational efficiencies now since the capacities are on time?
So largely what we are targeting is this year the overall gross margin will be around 32.5-33%. This will be the range this year. This is what currently we are looking at. And the operational efficiency, of course, we are targeting at least 0.5% improvement in below efficiency level, because last year we did a lot of investment in people, setting up teams, setting up plants, costs, everything. So this year we'll have some result of that.
Sure. Thank you and all the best.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Nitin Gupta from MK Global. Please go ahead.
Yeah, hi. Thanks for the opportunity. I just wanted to check on this margin questions again. Like this chana price increase, given we have procured 50 to 60% of seasonal requirements, so would we have any effect on our gross margin in Q1, or it's since we are hedged, we don't see any impact?
So largely in Q1 we don't see any major impact. In Q2, of course, we'll look into it, but in Q1 we don't see any major impact.
Sure, thank you. And secondly, on your A&P spending, so in FY20 when we sort of signed Amitabh Bachchan, there was a bunching up of A&P spending. So similarly, this time around when we have signed in, we have shot multiple videos and all. So do you think A&P spending as a percentage of sales will come down in the following years?
So largely, signing up with Amitabh is one thing, and depending on the marketing strategy. So largely, we are keeping close to 1.75-2% as a marketing budget, because this marketing budget we always keeps ahead from all the competitors, be it in consumer mind as well as distributors mind. So this is a branding investment what we planned.
Okay, thank you. My next question would be on your core market. We have grown at 9%. Can you provide some flavor in terms of how has been the growth in Rajasthan and Bihar, Assam? Just a qualitative comment.
Between these 3-4 states, if we look at, so Assam has been the highest growth, followed by Rajasthan, and then Bihar. Bihar, if you look back, Q2 has not been a great quarter for the industry also in Bihar because of heavy floods, what happened, early monsoons and all that stuff. So that's where, the growth of Bihar is about 7.8%, and rest, both these Rajasthan and Assam are double-digit growth.
Hello. So Bihar could be... Hello?
Yeah.
Hello? Yeah. So Bihar, you are saying 7.8% growth.
Yeah.
Okay. So, but this quarter, what was the impact? Can you be...
So quarter two was the impact, which has brought down the growth. Rest of the quarters, if you look at, or even the exit stuff, it's back on track.
Q4, so this 7.8 is the full year growth you are saying?
Yeah, correct.
Okay. How would be Q4? Any flavor you can
Q4 is back at double-digit growth.
Okay. ठीक है. And the next question would be on your, how is the profitability? Can you provide some flavor on your core and focus market? How is our profitability in these markets?
So largely from profitability perspective, so it's close to 1.5% lower than higher in core market versus in focus markets.
So 1.5% gap between core and focus.
Yeah, close to a couple of percentage.
Okay. And lastly, we are looking to grow Western snacks. Can you provide how we are looking to sort of manage the margin here? We have appointed CNF agents and have local production facilities. But the thought is something that Western margin generally are margin dilutive proposition. Can you provide some perspective on that? How we are going to manage our margin? That is the last question. Thank you.
See, there's been a paradigm and, to certain extent, fair also that Western snacks are margin dilutive. Now, the reason has been, one, that they are more on 5 and 10 rupees pack, so which is more of air or, say, low-density stuff, and hence the cost of logistics becomes by far high, right? For us, if we look at Western snacks is one of the categories where we play. So our contribution of Western snacks is just 8%. So therefore, it does not impact as much on our the bottom line or the EBITDA numbers because we sell a lot of stuff which are high density, like products like say sweets, which is very very high, papad and all, and this tags along over and above this stuff. So therefore. This is one reason that it is not margin dilutive for us. Second is that earlier it was so because you could not transport it from say Bikaji to the other corners of the country. But now that factories coming up in the local areas, in the regional areas, this further reduces this stuff. And our focus has been not just 5 and 10 rupees. We are into 20 rupees, 30 rupees and 50 rupees chips or large packs as well. So that's how we look at it. And we are pretty conscious in terms of that there is a threshold that our margins would not go beyond this stuff. If it comes to shove, maybe we'll have to pass the price to the consumer, but not take a hit in this thing.
Thank you, sir. This is really helpful.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. Participants who wish to ask a question may press star and 1. As there are no further questions, I would now like to hand the conference over to the management. Okay, there's a question. It's from the line of Nitin Gupta from MK Global. Please go ahead.
Hello. One last question I wanted to check on is the dividend policy we have. Given our capex going to be limited, so how do we see the dividend policy ahead?
Yeah, so this year we given 100% of face value, like we given 1 rupee dividend this year. So largely, besides we done a lot of investment, we also taken care of all the investors. So we close to 1 rupee. But yeah, overall in coming years, our target is to take this current 12% to 20-25% in next 3 to 5 years.
Okay. Thank you. And any thought we'll be needing capex after maybe 3-4 years or maybe 2-3 years. So how we want to use the cash generation?
So largely, currently our major focus is to utilize this capacity. Of course, we are looking at opportunity. If we see any good acquisition opportunity, currently it looks very expensive because this category is very hot as of now. But yeah, overall, we'll be looking to some acquisition also in coming years to come. But yeah, overall, currently we are majorly focusing on utilizing this cap.
Okay. And lastly, like since you are talking about acquisition, so if any acquisition, what kind of acquisition it's gonna be? Is it something like if we want to get hold of any market, we will acquire some regional competition? Like I just wanted to understand like what kind of acquisition we do and it is likely to be.
Yeah, so I think you rightly said that we would look at, say, some local or a regional stuff, and not that with the lens of the capacity what they have. This would be more from the lens of this would be more from the lens of that if we get or leverage their distribution strength.
Okay, understood. Thank you. Thanks a lot. Thank you.
Thank you. The next question is from the line of Gaurav Jogani from Axis Capital. Please go ahead.
Sir, just repeating Nitin's question, on the Western snacks part. You said that, yes, we have a bit of more higher price point packs versus the others. But sir, still, given the fact that even this year we have seen the pricing actually correcting for the Western snacks bit. So how should one think about margins in this particular segment? Because this segment is expected to grow the fastest.
So largely, Gaurav, also see, overall the growth what we are planning in ethnic snacks versus Western snacks, so largely currently it's close to 8% of top line. And we are thinking in next 3 to 4 years it will be 10.5%. And the margin gap between the two categories is close to 3.5% largely. So it will not impact my overall EBITDA, because if 8% goes to 10% and 3, so it will be overall about 0.06% on my EBITDA, and there are a lot of other work which we are doing. So we don't see any major impact on Western snacks hitting my bottom line.
Okay, sure. Got it. Thanks.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you very much, the organizers and the participants who took their time out to join this call. Hopefully we could answer the questions what you brought up, and would be glad to take offline as well if anything you feel was unanswered or you missed asking in this forum. Thank you once again for showing your confidence, interest in this organization. Yeah, thanks again.
On behalf of S-Ancial Technologies, that concludes this conference. Thank you for joining, and you may now disconnect your lines. Thank you.